Welcome to TradeTheNBI.com. This is John's reports for the 2nd of November. Okay, we're a day away from the big election, and we've had this transitional move back down to, well, what we had here at the end of September. So we had the, press that we saw. We ended up with the breakdown that started with the DOC spread, well, back at the beginning of it right here. It was confirmed when we got the magenta over the declining directional on the power 2. And then it just kind of held on for a little bit, but then we continued to see weakness without any support from either steel or even an orange move lower, and that is what caused the breakdown. And literally we saw it on the NASDAQ because that was the first to give the indication of it, and it just progressed from there. We've had some short-term buyers popping back into recently, and that's just kind of held things up from breaking down into new lows, which is entirely possible. From an NQ standpoint, you can see it was pretty clean from right here. We had this meeting point between the cyan and green on the DOC, and it just faded away quickly. For the cyan, strong support to it, and that has led to a breakdown going all the way to the 22% and lower range. So with the election just a day away, we're likely to see some more fireworks as we go back and forth. But again, I think this is an easy one because, again, you have the 23% at the 11,080, and that's just going to be back and forth around from above long and below. You're going to expect some more weakness whenever you have signaling intraday that details it. The euro breaking down to new lows because obviously you have now pretty much the entire European Union is just going to lock down again. It started in Britain. They announced a month-long. France is going there. But they also, more interestingly, I think that the issue with the Islamic Jihad that's taking place is probably more related to France wanting to close down. I know they were sitting there at 9 p.m. Paris, and the traffic and stuff going out of there was crazy. Italy keeps talking about it. Though with the protests here, it'll be interesting because you're starting to see these in Spain, definitely in France, and certainly now even in Italy, where people are just realizing that you can lock down to your blue in the eye, but that doesn't stop the virus from spreading, and it hasn't. Sweden's model is the only one that's been successful, and they have the closest to a normal resumption of life comparative to anyone. From an euro standpoint, though, that we keep looking at, there's still more room to go because we all the way go down to the 114 range before we filled in the positive extremes. So if those readings hold out, we're expected to break its lows. And again, nothing can happen with gold unless there's a shock of some kind from a world event that is going to suggest that there's inflationary pressures or some kind of resumption in massive stimulus, which is not happening in the U.S. until after the election, and then certainly, of course, depending on who wins. So that's going to be dramatic from that separate standpoint. So as I was talking about for the last several days, of course, I had some TradeStation issues again. It's becoming an ongoing battle with the programs of their new version. But when we see our declining long algo, short and long lines going down, when we see buy signals come within that range, we're much more skeptical of their support until you get a leveling out, which is where you get the dotted lines pop in here as a sign of a turnaround. That becomes a significant turnaround setup, because what you've got is the flattening of it and then a turn for the positive move. In this particular case, we were looking at some pretty steep declines. We had some pretty good drawbacks, but we just kept returning to it. And every time we were doing it, we were just creating new positive extremes. So every time we had a positive extreme get built into it, gets filled, create a new set of them, they got filled. Then you dip below the red line, so you got to retest those lows. And once you retested the lows, we made new lows. So you started all the way back again. And it was quite a significant day because we just kept doing that back and forth. And I mean, the ranges, we're talking phenomenal space here, 50 points. So this is that kind of potential volatility as people transition to who they think is going to win. Because before it was pretty set in everyone's mind that it was Biden, and then you've seen these other polls coming out with Trump big in Iowa, Ohio, leading in Florida, depending on which one you're talking about, and then also the competitive nature in Pennsylvania. So it's gotten a lot more crazy. Obviously, I think still the bias is always with the incumbent, but that's just kind of a historical setup. Anyway, we'll see how it plays out, though. But certainly, we've already started to see some volatility. Futures opened up lower to begin with. We were down into the below 50. Now we're back above 70 again. It's going to be a tumultuous ride for the next couple of days. But I don't necessarily think that it's difficult for us to see where things are going. So, from that standpoint, I don't really consider it to be problematic. I just think it's nice when you have these kind of ranges because you're able to utilize and capture really significant runs. And it's so important to be able to do that during these key periods because they don't happen that often. So with that, as always, trade well. We'll talk again later.